Well, we've seen the dollar value rise by about 25% in the last half to 3/4 of a year, versus the euro, versus the Canadian dollar, and versus the peso, Mexican peso. These are our major trading partners. They account for 50% of our our exports. And everything to them just became 25% more, everything we make to sell to them became 25% more expensive. That's a big hit. And so that's problematic going forward. Doesn't hurt North Carolina quite as much as it hurts some other states that are more heavily oriented towards exporting, such as South Carolina, which has a very large number of companies that are involved in exporting products made here to Europe, Canada, and to Mexico. But it's just simply, it's a drag. I mean, it just makes those products more expensive. And our major trading partners in Mexico, Canada, and Europe will buy fewer U.S. products. And that means fewer jobs for U.S. workers in those industries. And I don't see anything changing dramatically over the next year or two in terms of the value of the dollar. I think it's pretty much where it is. If anything, it's likely to get a little bit stronger going forward. And so, you know, this is something that was rather quick in its transition. I mean, for a currency to basically gain 25% strength that quickly against its three major trading partners is a little unusual. But nevertheless, it's not, I don't think it's coming back. I think it's going to continue on a little bit for the next probably 2 quarters. And we'll probably add another 4 or 5% increase in the value of the dollar during that period of time. So this is a little bit of this presents a little bit of a drag on the economy. And it may in fact be that while the major factor for the decline in real GDP in the first quarter of 2015 was weather related, particularly with the snow in the Northeast, there was also a factor in terms of exports as well being down. Well, we are right now entering the 7th year of this economic expansion. And that places it as in the top 5 of economic expansion. So if we can keep this thing going for another month or two, we'll be the 5th longest expansion of the 33 expansions that we have records on going back to 1854. When you look at the expansions that have lasted longer than this, what you see is a pattern of something kick-starting them in the 7th or 8th year to really cause them to continue, as opposed to just kind of peter out and, you know, have a mild recession. And what we're hoping is that the new normal, if you will, in energy prices is going to be that factor, that gas prices are going to remain in the $2.50 range. Oil is going to run between $60 and $70 a barrel. And that should be enough extra cash, if you will, in the economy to keep prices in check, but to also provide a stimulus going forward for at least a year or two. We don't think that energy prices are going to change. There's a dramatic decline in energy prices in the last 6 months, 7 months, from the summer of 2014 through January of 2015. 6 months, bam, it dropped basically in half. And in terms of the price of a barrel of oil, it's risen back up a little bit since then. We think it's going to stabilize around this $65 to $70 barrel price for the near term. And if that's the case, then that should be enough to keep the economy going in 2015 and 16.